No, ma'am, I'm asking him, but sir told that yesterday I asked him, he said today he'll give, ma'am. And
Oh,
today also he didn't give.
okay, okay, fine, no issues. Okay.
Yes, ma'am.
Today we are going to start dissolution of partnership.
Sure, ma'am.
You have any doubt so far to be asked?
No, ma'am.
Okay. Are you practicing questions at home? The chapters which I have taught you?
Yes, ma'am.
Okay, tell me which are the chapters you have finished, like you are having T.S. Gerwal book or D.K. Goyal?
T.S. Grewal book, ma'am.
Okay, so which chapter you have finished entire all the sums, exercise sums?
Ma'am, in tuition or in school, ma'am?
In tuition only, dear. I have nothing to do with your school. What, like I have taught whatever chapters you know, na? Till death I finished in tuition. So I'm asking about that only. Till death I finished. So how for you? Like you are where?
Yes, ma'am. Ma'am, the first chapter, Goodwill, I have completed that, ma'am. And Goodwill, one second, ma'am.
Yeah. Yeah.
One second, ma'am. I'll take my book and come.
Okay, okay, sure, sure. So write name of the chapter, dissolution of partnership.
Yes, ma'am.
Yeah, just unmute yourself. No, no, I mean mute yourself. Okay. Now see, what is the meaning of dissolution of partnership? Dissolution of partnership means the firm is itself going to shut down. Firm is closing. Business is coming to an end. Okay. Yeah. Pavitra, good evening, dear.
Good evening, ma'am.
Yeah. We are starting dissolution of partnership today. So, new chapter.
Okay, ma'am.
Yeah. So, what is the meaning of dissolution of partnership? The firm is closing, firm is going to come to an end. Now, what about this admission, retirement and death? In all those chapters, what happened? Only the agreement between the partners came to an end. Suppose any new partner is joining the business is not going to end. Only the agreement between old partner will end and new agreement will be made for the new firm. So that is the difference. If a new partner is coming, the old agreement between old partner will come to an end. A new agreement between all the three partners will be formed and then the business will continue. Business is not going to end. In the same way in retirement, if one partner retires, the new profit sharing ratio and new agreement will be formed. Business is continuing only. Death also, if any partner dies, remaining partner will form a new agreement and continue the business. So try to understand in all these three, the business is not closing, business is not shutting down, business is continuing only. But in dissolution of partnership, business is itself closing, shut down, business will come to an end. Business, there will be no more business, so business is itself coming to an end. That is the difference between dissolution and that previous chapters. So dissolution of partnership agreement, change in profit sharing ratio like in case of admission, retirement, etc. So So dissolution of partnership and dissolution of partnership firm both are different. Dissolution of partnership means only the partnership agreement will get dissolved in case of admission, retirement, death. I said just now, profit sharing ratio will change and everything will happen. Dissolution of partnership firm, this is name of our chapter. If business closes or comes to an end, then only dissolution of partnership takes place in partnership firm. So whenever the business closes, during that time only dissolution of partnership firm takes place. If any page is not clear, kindly let me know, I will send. Yes dear?
I said sure, ma'am.
Yeah, okay. Now, third point, kindly write it down everything dear. When dissolution of partnership firm takes place, okay. Now, whenever the dissolution, that is when the business is going to close, when business is coming to an end, business is going to shut down, then what we should do, all the assets sold off, whatever assets are available in the business, all the assets are sold off, because when there will be no business in future, what to do with the assets? Assets should be sold out to pay the liability, external liability. All the liabilities are paid off, expenses paid off, reserves distributed. We know if any general reserve, partner will get. Final settlement of partners. Now whatever each partner will get, that final settlement is also done here. Now what are the accounts which will be prepared in dissolution of partnership? Realization account, partners capital or current account. If the capital are fixed, then you know two capitals are prepared, fluctuating capital, that is normal capital account, and current account. Partners loan account, bank account, no balance sheet prepared. There is no need to prepare any balance sheet. In balance sheet what you will write? No liability, no assets, everything sold out, everything paid out. So nothing left, firm is going to close. What you will write in the balance sheet? So always remember, in dissolution of partnership firm, no balance sheet is prepared. We are settling down everything and closing the business. At the time of closing the business, what you will prepare? Balance sheet, no use. So bank and bank account should tally. In dissolution of partnership, you are going to prepare bank account separately, and all the transactions you will do posting there. Then what you will do, no balance CD will be there. Once you do the totaling part, debit side and credit side, what you will find, both the sides will tally. Okay, automatically it will tally. Understood? Sachin, Pavitra, so far you are having any doubt dear?
No, ma'am.
Yeah.
No, ma'am.
Yes, okay. Yeah. Now, I hope till here you wrote everything. Kindly write it down dear, each and everything. Try to understand.
Yes, ma'am.
Yeah. Prepare realization account format. Debit, credit, particular amount, particular amount. So what are the things? See, why you are preparing realization account? By the name itself you can understand. To realize the assets and pay out the liabilities. That is why you are preparing realization account. What is the meaning of to realize assets? Whatever assets business is having, tangible assets, it will sell it out. Then whatever cash business is getting, from that cash external liability will be paid. External liability means, what is the meaning of external liability? Any bank loan or any creditors, any financial institutions, anything like bills payable, all those external, whatever amount the third party needs to get from business, those are paid out of the assets realized from that amount. So that is the reason we are preparing. Now in realization account, first always remember, when you are preparing dissolution of partnership firm, whenever you see the balance sheet, all the assets from the balance sheet should be emptied. It should be transferred to realization account. What is the meaning of this? All the assets should be emptied, transferred to realization account means, see, assets always have debit balance. You all know. Liabilities have credit balance. So in balance sheet, when you see the debit balance, what you will do, whatever amount is given in balance sheet, assets value, you have to write in the debit side of realization account. You are closing the assets because business is going to close. Closing the assets means if assets have debit balance means whenever any assets increases you have to debit. Now if the assets needs to reduce or remove from the books, going out from the books, what you will do, you have to credit. So what will be the this journal entry for transferring assets from balance sheet to realization account? Whatever assets are there, you have to debit. Suppose plant, machinery, land, building, furniture, fixture. I am talking about tangible assets again, which you can sell in the market and make it into cash. That is only tangible assets. You can see with your eyes, you can touch. So all the assets you have to credit. Realization account you have to debit. By crediting all the assets, what is happening? You are closing all the assets. And by debiting realization account means you are transferring those assets into realization account. So this will be the journal entry. Realization account debit to all assets. Whatever you are saying in your balance sheet. Again, tangible assets I am telling. And in that also cash in hand, cash at bank will not come in the realization account. Why? In dissolution you are going to prepare separate account, bank account, where the cash balance, bank balance will be transferred and will be tallied at last automatically. So kindly write it down, all these tips whatever I am saying. In your own words you can write it down. You all are grown up children, so in your own words you can write it down for your understanding. Cash in hand, cash at bank will not come in realization account. So where it will go? It will go in a separate account, cash account or bank account. That ledger we have to prepare here. And all the tangible assets will come here. And now what about this, like intangible asset? Intangible assets means goodwill, trademark, copyright, all the software, all these are intangible assets. That also you have to transfer. Okay, that also you have to transfer in the debit side of realization account like other assets. But there is a difference. You have to learn many things here. See, when you will sell, the question will tell few adjustments will be given in your question. So you have to read the question, like this particular asset has been sold for this much and this liability has been paid this much. Some information will be given. Accordingly, we will sell the assets and make into cash. Sometime the question will be silent. Once you transfer, suppose plant and machinery, furniture, fixture, land and building, for example. Now you read the adjustment. No information is given about selling land and building. Question is silent. You read entire question. Nowhere they are selling that. They are not saying that land and building is sold for how much. Then what you will do? These are tangible assets. So in the credit side of realization account, you will write by bank or by cash. Then the book value, that is the value shown in the balance sheet for land and building. Suppose 1 lakh rupees. That 1 lakh you can write. So at book value, the assets will be realized if the question is silent. Kindly write it down as important note in your own words, whatever I am saying dear. Now, see what I said at book value when the question is silent. But tangible assets, write it down only for tangible assets. For intangible assets like goodwill, copyright, trademark, all these you will transfer in the debit side of realization account. But again there is a rule. Suppose the question is silent. Question is not telling goodwill is sold for how much, trademark is sold for how much, copyright is sold for how much. You cannot write at book value for intangible assets if the question doesn't tell you for how much you are selling the intangible assets. It means it has zero value. So no need to write anything. You can just leave. You are not selling those things because it has zero value if the question is silent. But for tangible assets, if the question is silent, you have to sell. You can't leave because business is going to close. You can't leave any assets unsold. You have to sell the assets, then only you can make payment to the outside liabilities. Whether the question tells or not, that is why you should be very, very careful, very, very alert while doing the sums. You have to check whether each and every assets are sold or not. Tangible, intangible, you have to check because you are going to do as per the question given in adjustment. Sometime question will be silent for tangible asset. Then as I told you, at book value, you yourself have to sell it. You have to write in the credit side by bank account. Till here, any doubt? Pavitra, Sachin, any doubt you people are having? Okay. Are you writing the important points, whatever I am saying?
Yes, ma'am.
If I want to repeat, I am ready, but kindly write it down as important points, all these things. In your own words, you can write it down. Pavitra, are you writing, dear? Pavitra, can you hear me? Am I audible? Yes?
Yes, ma'am.
Yeah. Okay, dear. So now what about liabilities? And one more thing, kindly write it down. Suppose provision for bad and doubtful debts is given in balance sheet. Normally we get like debtors minus provision for bad and doubtful debts, they will give in question. In dissolution of partnership firm, we have nothing to do with provision for bad and doubtful debts. What is the meaning of this? The meaning of this is debtor is an asset. So whatever amount is given in debtor, just transfer it in the debit side of realization account like other assets. So you have to write two debtors and whatever amount is given in realization account debit side. And that provision you should show in the credit side of realization account. You will treat it as a liability. So you have to write in the credit side because all the liabilities are shown in the credit side of realization account. Again, I will explain you in detail. So all the liability means what? Only like this provision is also like provision for bad and doubtful debt should also be shown in the credit side of realization account. You can't write in the debit side debtors minus provision. No. In dissolution of partnership firm, that is in this chapter, you have to show it separately. Okay, understood?
Yes, ma'am.
Yeah. See, liabilities have a credit balance. This is basic. Credit balance means liability increases which side? Credit side. Whenever liability increases, you are going to credit the liability account. Now, suppose you have to close the liability account. Close means now you have to remove from the book. Again, as I told you, when you are you have to empty all the assets from balance sheet, transfer to realization account. Same way, you have to empty all the liabilities also. So how to empty, how to remove it? Liability have a credit balance. If you have to close or transfer liability to realization account, you have to debit the liabilities. So all the liability you have to debit and you have to credit realization account. Kindly write down the journal entries also, very, very important. Whatever I am saying, write it down. For transferring liabilities into realization account, write in this way. What will be the journal entry? All liabilities account debit to realization account. Write it down kindly. For transferring assets, what you will write? Realization account debit to all assets account except cash. Cash will not come in realization account. It will go in a cash account. That separate ledger we have to prepare. Write it down everything. The journal entry also you have to write it down.
Ma'am, can you repeat one more time, ma'am?
Yes, Sachin?
Ma'am, can you repeat one more time, ma'am?
Yeah. For transferring all the assets to realization account, journal entry will be realization account debit to all assets account. In bracket you can write except cash bank, that will go in separate account, ledger account. We have to prepare separate ledger for cash or bank. Written.
Yes, ma'am, except cash or?
except cash or bank or provision for bad and doubtful debts, you can write exceptions. These are cash and bank, that will go in separate account, cash account, and provision for bad and doubtful debts, that will go in the credit side of realization account.
Yes, ma'am.
Yeah. And for liabilities, for transferring liabilities from balance sheet to realization account, what will be the journal entry? Very, very important in this chapter. They may ask journal entry or they may ask account. Anything boards will ask. So be thorough with each and everything. We don't know what they will ask. So you should know everything. I don't want to take any risk. So now, what will be the journal entry for transferring the liabilities from balance sheet to realization account? As I told you, you have to close the liability, means liability has a credit balance. How to close? You have to debit. So all liability account debit to realization account. Realization account will be credited. Liability account will be debited. In this way, we do the transferring entry from balance sheet to realization account. Yes, Pavitra, you have any doubt? Pavitra, can you hear me, dear? You have network issue?
Yes, ma'am. The network is fluctuating a bit.
Okay, fine. You have any doubt, dear, to be asked?
No, ma'am, it's clear.
Okay, fine, dear. Fine. So this is the process we do. And what, like now, how to do the payment of the liabilities? Once you write the liabilities in the credit side of realization account, you can't just leave like that, because again remember, now business is going to close. So you have to settle everything. You have to settle the liabilities, you have to sell the assets, you have to pay to the partners. All these things you have to do. You can't leave like that. So once you transferred the liability, now the payment should be done. Now what will be the journal entry for making payment to liabilities? Again the journal entry. So write it down. For making payment to third parties or external liabilities. For that, realization account debit to bank account or cash account. Bank oblique cash. Any one you can write it down. Realization account debit to cash or bank account. You are making payment to the external liabilities. External liabilities means to person who has given something on credit to us. For maybe creditors, they have sold goods on credit. Bank loan, they have given loan to the business. So like that, we have to make payment to them when the business is going to close. So for that, journal entry will be realization account debit to cash or bank account. Write it down everything, dear.
Yes, ma'am.
Yeah. Now for selling the assets, once you sold the assets, then what will be the journal entry? Obviously, just think logically. If you are selling any asset of the business, asset will go out, no issue. But here no need to debit or credit any asset when you are selling. Why? Because remember, now no asset account is there, because you have closed the asset account by transferring to realization account. So now whatever you are doing, you have to debit or credit realization, then cash. That's all for assets and liabilities. You should remember this. Now assets have been transferred to this account. So like in normal journal entry, I'm not talking about this. If it is a normal journal entry, what you will pass? Suppose any asset is sold, bank account debit to asset account. But here you can't do. You transferred already, accounts closed. So you have to do the selling or making payment of liability through this account only. So realization account will be used. Now for selling the assets, when you sell assets, cash is coming. So cash account oblique bank account. Any one you can write. Debit to realization account. Are you understanding? Don't use asset account. Yes, both of you, Pavitra, Sachin.
Yes, ma'am.
Yes, ma'am.
Yeah, kindly write it down, dear. These all small tips. Students do the mistake because you are in the habit of debiting, crediting asset when purchase sold. That is the basic journal entry. If you forget and do the same here, question will go wrong. This is different. Again, pass the entry for making payment to liabilities. Again, no liability will be used, name of the liability, when you do the this payment part. Why? Again, liability account we have closed na. Liability debited means you have closed the account, no more liability is there. Then again, if you do, it will go wrong. So what to do? When you do any payment, realization account debit to cash oblique bank account. So what you learned mainly in this chapter, whether you are making payment to liabilities or you are selling the assets, you have to use realization and cash account. You can't use any liability account or any asset account. Why? Again, it has been closed. By transferring to realization account, you closed all the accounts. So you can't use their name. Understood?
Yes, ma'am.
Yeah. So till here I hope each and everything you both of you have written. Don't miss anything, right? Everything. Yeah.
Yes, ma'am.
Yes.
Okay, fine. So these are the things I want to tell you. I will tell you many more things. There are a lot of concepts here. We will first, now we are going to see the realization account format. So come in the debit side, to balance brought down. To balance brought down means from your balance sheet given in your question, you are going to transfer the assets. All assets. So all assets, but you remember or you write it down, cash, bank, provision, all these will not come in the debit side of realization account. Goodwill is treated like other assets. So goodwill is treated like other assets. Tangible assets, you will transfer goodwill also here. Don't get again confused, because in rest of the chapters, like previous chapter, whether death, retirement, admission, whatever existing goodwill shown in the balance sheet, what you used to do? You used to write off that goodwill in old ratio. In previous chapter, till death you did the same. But in this chapter, you can't do that. You have to treat goodwill also like normal asset and you have to transfer in realization account. So kindly write it down as important note. You should not do any mistake. Be clear with the concepts. When you are doing dissolution, goodwill will come and chances are there you may get confused because you did retirement, admission, death. Goodwill, what you did, existing goodwill in balance sheet, you have written off in old ratio among old partner. Don't do this here. You have to treat like other assets. You have to transfer in realization account. So write it down kindly. Now when it comes for selling purpose, read the question properly. If the question tells you that goodwill has been sold for some amount, it's okay. In the credit side of realization account, you can write by cash or bank and write the amount. If the question is silent, question doesn't tell you anything about goodwill or any other intangible asset, leave it. No need to write anything in the credit side of realization account because value has become zero. Understood?
Yes, ma'am.
Yeah.
Yes, ma'am.
Okay. Now debtors to be taken at gross value, that is before provision. So debtors less provision will be given in your question in balance sheet sometime. So don't take after subtracting the provision. Always take the gross debtor. Whatever total amount of debtor is given, that amount will come in the debit side of realization account. And the provision you have to write in the credit side of realization account. Now to bank account, we are writing to bank account in the debit side of realization account. All the liabilities you are making payment, creditors, bank loan, bills payable, any other loan, any external party loan. Business is making the payment. So realization account debit to bank for making payment of liabilities. After that, come to the credit side of realization account by balance BD. What is this balance BD? All the balances of the liabilities shown in the balance sheet. By balance BD you can write and all the liabilities including bank overdraft. Bank overdraft is also one type of loan which business needs to make payment to bank. So what is bank overdraft? It is also one type of loan. Business needs to make payment of bank overdraft to the bank. It's a type of loan only. Including provision for bad and doubtful debts. Bad and doubtful debts, you know, provision if any created, that you will show in the credit side. Including employees provident fund. Suppose employees provident fund is given in the liability side, that is also a liability. You have to make payment to employees. You have to write on the credit side. Then by bank, suppose assets are sold, tangible assets are sold and the amount is given in your question, then how you will do? What will be the journal entry for that? Bank or cash account debit to realization account. Kindly write all the entries, journal entries. So in realization account credit side, you will be writing by bank the amount for which assets are sold. That amount you have to write. One more very important concept, kindly whatever it is coming to my mind I am telling, so kindly write it down, don't ignore, otherwise you will face problem while doing the sums. See, like in admission, retirement and what the death chapter, whatever chapter we did so far, what you used to do, you used to prepare revaluation account. Suppose there is increase in value of assets, you have to record there. If decrease, you will record same for the liability. Here, kindly write it down, in dissolution of partnership firm, you have nothing to do with the increase or decrease in value of assets or liabilities. You have to see how much payment is made to the creditors or external liability, that amount you have to take. In the same way, how much the assets are sold, how much cash is coming into the business by selling, that only you should focus. You have nothing to do whether the assets are sold for profit or loss, liabilities are paid for profit or loss. No, in this chapter we have nothing to do with that. So be clear again, don't get confused. So whatever points I am telling, kindly write it down. First I told about goodwill. Goodwill cannot be written off in this chapter. You have to write it. You have to show like other assets. Then what I said, then like increase or decrease in value of assets, liability, we have nothing to do with that. How much cash paid to creditors or liability, that amount you have to record. How much creditor, like suppose the creditor, the payment of credit means creditor should be paid 1000 and business is making 900. So 100 profit, you can't show anywhere that 100 profit, don't do all those things. Here, if creditors are paid 900, just show in the, where you will show realization account debit to bank, in the debit side you can write to bank, bracket you can write creditors. So creditors paid 900. No, we have nothing to do with profit or loss. Understood? Yes?
Yes, ma'am.
Yeah. Okay, dear. Okay. Kindly write it down, dear, everything. Okay. Till here we did. So now, after transferring and making payment and everything, after selling the assets, all those things when you finish, then you have to calculate whether by doing this selling of assets, making payment to external liabilities, now is there any profit or loss. Again the same rule applies as usual. You have to do the credit side total, then you have to do the debit side total of realization account. You have to see which side is more, that amount you will be writing both the sides. Suppose credit side is more, it means profit. Suppose debit side is more, it means loss. If credit side is more, then in debit side what you will write? To partners, to profit on realization account, transfer to partners capital account. A, B, C, how many partners we don't know in question, you have to pay them that profit, business will pay in their old ratio. Suppose loss, then it will come in the credit side of realization account. By loss on realization account, how many partners you will distribute that loss in old ratio. One more important and very easy part in this chapter is We don't have any gaining ratio, any new ratio, nothing. Only one ratio, old ratio. You have to use that ratio for everything and do the sum. So no confusion among this gaining, sacrificing, new ratio, nothing. One ratio and you have to do the sum. So no confusion in that also, like other chapters. In retirement you have to calculate gaining, in admission sacrificing, in death also gaining or sacrificing you have to calculate. So nothing to do here. You have to just, what you have to do? You have to use the old ratio given in your question. If no ratio is given, you know the partnership rule. Equal partners. Okay, if 3 partners, 1:1:1. 2 partners, 1:1. So that rule you will apply, equal partners, if ratio is not given in your question. Till here any doubt? Sachin, Pavitra, any doubt you people are having?
No, ma'am.
Oh, fine, fine. Now what we are going to do? So step 1, what will be the step 1? All the assets you have to transfer from balance sheet in the debit side of realization account, and all the liabilities from balance sheet in the credit side of realization account you have to transfer. Step 2, all the assets, question will tell you particular assets sold for how much, that you have to do sell off the assets, pay off the liabilities. Step 3, if any expenses are paid, realization expenses, you have to see that also you have to record in the debit side of realization account. Finally, you will calculate profit or loss on realization account. Any doubt in this realization account?
No, ma'am.
No, ma'am.
Okay. Now partners capital account. So how to prepare partners capital account? Whatever capital balances are given in balance sheet. Suppose 3 partner A, B, C. So debit credit, particular amount ABC, particular amount ABC. You know all these basic debit credit. You have to write by balance BD, their capital balances you will write in the credit side. And that capital will also not be transferred to realization account, that will go in capital account. When you empty the liability side of the balance sheet, don't do that. All the capital balances will be transferred to partners capital account separately. It won't come in realization account. And in asset side, as I told you, cash or bank balance will go in bank account. That will also not come in realization account. So write it down, these things. Now suppose in the liability side of the balance sheet you are finding that some reserve is there. Some reserve means general reserve. So that general reserve will also not come in realization account, because that reserve who will get? Partners will get. So ABC, 3 partners by reserve, whatever amount distribute in their ratio, old ratio. Suppose the same rule. Suppose you are seeing liability side of the balance sheet, any PL balance is given. So liability side, PL balance means profit. That profit partner will get. They will get in their capital accounts. So you have to write by PL account, and whatever amount of profit distribute it in old ratio. And suppose suppose any liability is paid by any partner. Listen carefully and write it down. What I said, that is firm's liability. You have to understand. That is firm's liability. So firm should pay that liability. It is not partner's individual liability or personal liability. But sometime in dissolution what happens, any partner, like among ABC, A may say that at present I will pay this particular liability, like I will pay to creditors. So he is taking the responsibility. It is not his work. So what will be the journal entry? Firm needs to make the payment afterwards to A. It's not A's liability, it's firm's liability. Firm's liability means A, B, C. All the 3 of them, it's their liability. All the 3 should share that liability. It is not A's alone liability. But he is saying that now, okay, I will pay for the time being. You can make the payment to me afterwards. This is what happens in dissolution. Now, what will be the journal entry? So, kindly write it down. If any partner makes the payment of firm's liability, done. realization account debit to partner's capital account. Try to understand why you are debiting realization account. Always remember, just try to understand the concept. If you are debiting realization account means that expense or that particular amount is beared or borne by the firm. Bear or borne means it is firm's liability. It is firm's responsibility. Firm needs to make the payment. That is why you are debiting realization account. Now why you are crediting to partner's capital account? Because partner will get from firm that amount whichever partner paid as firm's liability. Got it? Pavitra, Sachin, are you understanding why we are doing these entries and how?
Yes, ma'am.
Yeah. That is why here I have written by realization account in bracket liabilities paid by partner. Suppose A paid any firm's liability, then the journal entry will be realization account debit to A's capital account. That is why in the credit side of partner's capital account we are writing, you have to write by realization account. In A's amount column you will write the amount. Firm will make the payment to A. Now whatever profit on realization has taken place, that profit also all the three partners will get in older ratio. So by profit on realization account. Now come to the debit side of partners capital account. To PL account. Suppose you are seeing the balance sheet. Their profit and loss account is given in the asset side. Now we are talking about asset side. Asset side of the balance sheet if PL account is given. Already I taught you many times. Whenever you find any PL balance in the asset side, what does it tell? It means there is loss for the business. If there is any loss, how it becomes assets? Because whenever there is loss, partner will make payment of that loss to the business. Business will get from partner that amount of loss. That is why it is asset for the business, loss for the partner. Try to understand the concept deeply. Now when you see any PL account in the liability side, why you are seeing in the liability side means what? It is profit of the business. Business earned profit. When business earned profit, how it is liability for the business? Whatever profit business earned, business can't keep itself. Owner of the business are partners. Business needs to give them that profit. So it's the liability. Business will make payment of that profit to the partners who are owners of the business. So for partners, it is profit. That is why it is shown in the liability side. Business needs to make that payment of profit to the partners. So if any debit balance you can call, or you can say asset side if you are seeing any PL account balance that is loss, partner will pay to the business. So come in the debit side of partner's capital account, you will write to PL account ABC, whatever amount of loss distribute in old ratio. So A will pay that much, B will pay that much, C will pay that much to the firm. Any doubt till here? Pavitra, Sachin, any doubt?
No, ma'am.
No, ma'am.
Okay. Now after that, suppose any asset is taken by any partner, kindly write it down. If any asset is taken by any partner, then what will be the journal entry? See, if any, sometime it happens, whenever the business is coming to an end, business is closing, A, B, C, suppose B is telling, I will take this asset for rupees such and such. So, firm's asset will be taken by any partner means partner is taking home that asset. So, he will make the payment to the firm for that asset. Now, what will be the journal entry? Journal entry will be, suppose B is taking any asset of the firm. B is capital account debit to realization account. That asset is whose asset? Firm's asset. Okay, but partner is taking that asset, so he needs to make the payment to the firm. That is why his capital account is debited. Whenever any partner takes any asset, his or her capital account will be debited, realization account will be credited. Write it down please. In the same way, whenever any liability is taken by any partner, realization account will be debited, to partners capital account will be credited. I hope it's clear, both of you.
Yes, ma'am.
Yeah. Now suppose there is loss on realization account. You have prepared realization account and you got loss. Then that loss should be paid by the partners to the firm. Come in the debit side of partners capital account. To loss on realization account, whoever is bearing how much loss, you have to write that amount. So very simple concept. Whenever you write anything in the debit side of partners capital account, it means partners are making payment to the business. Whenever you are writing anything in the credit side of partners capital account, business is making payment to partner. Simple logic. Partners account is prepared in that way only. Understood? Any doubt?
Yes, ma'am.
Okay. Now bank account. Kindly write it down, the format of bank account. So you can write bank account, debit, credit, particulars amount, particulars amount. First in balance sheet you will have some balance, cash in hand, cash at bank, whatever. That you have to bring to debit side of bank account. It's an asset, so in the debit side the balance BD will come. To balance brought down, whatever amount given in balance sheet you can write it down. Then you have to see what you will see, the partners capital account you have to see. If you see partners capital, realization account, wherever two cash is there, it means what? Realization account debit, to cash means you have made payment. So in the credit side of bank account you will write by realization account if liabilities are paid, any expenses are paid. Suppose in the credit side of realization account you are seeing cash, by cash account means cash account debit to realization account, assets may be sold. So in the debit side you will write what? To realization account, and bracket you can write assets sold. Now in partners capital account, after doing everything, you have to make payment to partners, because now business is going to close. Each and every partner same, you have to see the total of debit side, total of credit side, then how much A will get from business, how much B will get, how much C will get. All these the simple ledger you have to do, and you have to write to bank account. Partners capital account debit side to bank account. You are making payment. Whatever, that is final settlement. Business is going to close, no more new firm, no more balance sheet, nothing. Everything you are going to close. So to bank account. Now this to bank account will come in the credit side. By A's capital, by B's capital, by C's capital. We are making payment, cash is reducing. So what is the logic of bank account? Whenever cash comes into the business, you have to debit. Whenever cash goes out of the business, you have to credit. Any doubt so far, anyone?
No, ma'am.
Oh.
No, ma'am.
Okay. Now page number 4. Treatment of workmen's compensation reserve. Like in other chapters, we learned how to do the treatment for this workmen compensation reserve, investment fluctuation fund and all. Here also you have to learn. So start writing. Suppose A and B, there are two partners. Their profit sharing ratio, or you can call them as old ratio, 1:1. WCR, workmen compensation reserve, in the liability side is given 40,000. For example, suppose the first case, no claim or no information. When you read the question, in the adjustment, nothing is given regarding this WCR. No information is given. What you will do? What is the journal entry? Workmen compensation reserve account debit 40,000 to partners capital account. To A's capital, to B's capital. This 40 will be distributed in 1:1, 20-20. So what you understood from first case? If there is no claim or no information about WCR, you cannot take that amount to realization account. Simply you can distribute this amount among partners and it will go in partners capital account. So this should be the case 1. Understood? Case 1 you both of you understood?
Yes, ma'am.
Okay.
Yes, ma'am.
Okay. Now we will move to second case. If claim is 20,000, reserve is 40,000. Suppose workman compensation reserve in liability side 40,000. In adjustment, when you read, question tells you that there is claim of 20,000 for workman compensation. So now reserve is more than the claim. Now what will be the journal entry? As usual, first always WCR should be closed by debiting. So journal entry will be workman compensation reserve account debit 40,000. The reserve was for 40,000. Now whatever, see, try to understand, whatever the claim is there in dissolution, whatever the claim is there, that much amount you have to transfer to realization account. Why? Because once you transfer 20,000 claim, you have to show the payment also. Suppose 40,000 is the reserve, 20,000 is the claim. So how much claim? 20,000. That you will show in the realization account as liability. So in the credit side you will show by workman compensation claim 20,000. Again immediately in the debit side you have to show the payment to bank account being workman's paid. 20,000 in this way. So kindly write it down, try to understand. Treatment is different. It is not same like other chapter. Here only the amount of claim you will show, and simultaneously you have to show the payment also to workers. What about the remaining reserve 20,000? As usual that the partners will get. It will go in the partners capital account. So in partners capital account that 20,000 will be distributed. And this, as I told you, the claim which you have shown, that you have to show the payment. So realization account debit to bank, that 20,000 payment also you have to show. Any doubt in the second case?
No, ma'am.
Okay. Pavitra? Yeah. Now third case. If claim equals to reserve, suppose 40,000 is the claim, 40,000 is the reserve. Everything you will get in your question. But you should know what is the treatment. Suppose in your question, workman compensation reserve in the liability side of the balance sheet is 40,000. When you read the adjustment, the question tells you claim is also 40,000. Both are equal, then what you will do? Then nothing will be given to the partners. There is no excess, no surplus. Partner will get nothing. Then what to do? What I said to you in the beginning, total amount of claim should always be shown in the realization account credit side, and same should be paid. So if claim is 40,000, reserve is also 40,000, what will be the entry? Workman compensation reserve account debit 40,000 to realization 40,000. So in the credit side you have shown the liability, immediately do the payment. In the debit side of realization account to bank, workman compensation paid 40,000. So partner will get nothing. Yes, any doubt in the third case?
No, ma'am.
So see, treatment is different. Kindly don't get confused with other chapters. In dissolution for goodwill, provision for bad and doubtful debts, for this workman compensation reserve, you have to learn, you have to understand and practice. Treatment is entirely different in dissolution. Now the case 4. See, suppose claim is 50,000, reserve is 40,000. Business has created only 40,000 reserve, but workers are asking to pay 50,000. Then what to do? Again, see, workman compensation reserve account debit 40,000. You have to, anyway you have to close. To realization account 40,000. Okay. Why you are transferring that 40,000 to realization account? Because claim is more than reserve. So nothing will be left for the partners to distribute in reserve. Then again that 50,000 you have to make the payment. Then realization account debit to bank account 50-50. Understood?
Yes,
Yes, ma'am.
Yeah. So till here we will keep for today, dear. Next class we will continue. It's a little bit big chapter. Okay, we will do it slowly. Try to understand, practice at home. Okay?
yes, ma'am.
Yeah. Thank you, dear.
Thank you, ma'am.
Yeah, thank you, dear. Pavitra,
Thank you, ma'am.
thank you.
Bye.
Yeah, bye, dear. Bye.